Welcome everyone. How we doing? Whoops, Mike was unmuted or muted. Dumper there, dude. Nice one. That's crazy. Yesterday we were talking about this triple bottom or whatever down here for 258. Did not think we were gonna get there today, but it was already showing that weakness. Nice breakdown, technical breakdown, and everything. So it basically gave up those previous highs and never looked back. Knifer, beauty, sick catch there, Viral. Nice work. Yeah. Market was a knife mode today, that's for sure. Some people were asking me about it, and I don't know. The only thing I could figure is, we did put up some real nice earnings, but didn't change what Pal said, and obviously looks small now, but we took that nice sell yesterday. I even talked about it with Pal. Um, it's like the market started listening to it again, did not like seeing inflation tick up for the second month in a row. Of course, not getting out of control or nothing like that, but another tick up on it. Yeah, that thing was nutty. I was watching it a little bit after it opened. That's crazy. It's insane. That's what a low float will get you. Low float, no volume. That's thing I get to moving. It's pretty cool. A few people caught that. Shout out Robinhood for giving randoms uh a shot at this. I mean, I don't know about Norvin calling it. I heard a lot of other people talking about it. Yeah, but yeah, uh maybe we should just give Norvin credit for it. Let's call it Norvin's trade. I'm sure he's gonna come in here with some outlandish story that he somehow got 1,000 shares of it or some craziness. I can't wait to hear it. Yeah, that's good, dude. It's funny. That was one of the first things I looked at this morning. My bias was definitely wrong on the day. I can't say that I was fully wrong on the day. I've I wanted a pop to short. I didn't think this was going to be the pop to short, before we just cratered. And so obviously I was off the mark, sold all day, virtually a few nice little bounces in there. But I've really been hoping, or I was really hoping we were going to get one nice little pop in the market, stay up here somewhere, and then be able to catch a short into the close and off of those highs, but no such luck. Yeah, look at that thing. That was a lunker.
Shares of both Microsoft and
3 buck
Meta are
opening
surging.
range. There's your measured move, and it still gives some more after that. Break down and rip back into it. That crush out of it, though, that was money. Welcome, everybody. We'll just give it a few more minutes here. Hope everybody had a good day. It's a pretty fun one if you're on the right side of it. Definitely had a few DMs of we've been warning these last couple weeks, careful on the pile in longs. It's gonna start to catch up to you. And definitely a lot of unprotected longs got smoked today. Had a couple people message me that they just couldn't get on the right side of it. Oh, we got Ramsey in the house. Let's check it out, dude. Look at it. This thing just went on a heater. Um, Look at this is where I bought. I sold over here though. I made a couple bucks on my two shares. Was happy with that. Do I think Apple holds? I don't know. I haven't actually read the report yet. It's got some mayhem going on. Um, I haven't actually read the report yet to really give a good thought on it. I did see, yeah, that sales blow past estimates. I know that there was some good in there, obviously. Apparently market was just looking for a bit more good than what it had to offer. Um, as far as does it hold, I mean, I don't know. It's only up like a few bucks, $3, $4, no matter what. If you're like some weeklies, they're roasted and toasted. Oh, we're getting all kinds, it's tariff stuff. News coming out right now, huh? Yeah, Bird of the Moon. Oh yeah. Destroyed. Get those things off there. Just destroyed, huh? Beauty. Yeah. It's you could have shorted just about anything today, huh? And you were pretty dang happy.
Damn.
Okay, give me one more second. Gonna make another post and uh whoa, dumped out of the range. Look at that. That's what range breaks get you, remember? Wow. A lot of those things we talked about last night sure did play out, huh? You try to catch the bounce there when it doesn't work, you short it because it's likely gonna go fill that gap. Shouldn't think it'd go fill that gap in a day. God really didn't even give a chance for entry. Gave you a small bounce. I guess that's actually halfway, I actually gave a pretty halfway decent bounce off that bottom down there, man. Little buck ripper on Pepsi is pretty nice. Yep. And that breakdown right there, that was the no-brainer. I mean, if you snuck it in here, God, you did have an opening range set, instant breakdown. This one I probably would have gone for that one. To be honest, my day was super boring. We'll talk about it in a little bit. But no, I mean, mine was like a below average day, honestly. Yep, there you go, Aaron. That's all you got to do. And I mean, this was like, that's an unfortunate knife. This bounced back up as a friendly enough stop out, but that 140-50 zone, I mean, you had to try to catch the bounce. We just got caught up in, markets selling dang near everywhere. I'm sure some things out there were green, but pretty much everything was getting clobbered today, obviously. I guess I never saw having a meta in today. Great day for meta. Meta held it as far as I'm concerned. That's sick. That's a wild one. Okay, let me make a post and we'll get this thing rolling. Nice, Eric. Got some out of spy. Good. Yeah, I made a couple bucks out of it, but we'll talk about that here in a second. Uh, So welcome everybody. Happy to have you here, Dirty River. Tonight we're having a kind of a different class. It's not necessarily going to be so much technical. We're obviously, as always, I always bring everything back to the charts. That's just, that's what I like to do is make sure that we always relate what we're doing to the charts. I don't care your trading style. I don't care how you trade. You look at things on the charts, whether you don't use support and resistance and trends or do or whatever. So we aren't going to be talking about how to identify any of that stuff. What's up, Nando? How we doing? We're just going to be talking about what do these charts tell us? Tell us what to do. Tell us should we buy? Tell us should we sell? Those kinds of things. And then we're going to be talking about how to really manage and think about trades. Like all trades are a little bit different, obviously. And so, Gator, how we doing? Welcome. All trades are a little bit different, but tonight we're going to be talking about the three main things people do: scalp, day trade, swing. Scalps, they're going to be your quick cut and dry. You're looking for 5, 10, 15%. Maybe you find yourself into a sick entry if you catch a little reversal. But they're just for quick little payday. For me, scalping is not my main form of income from trading. It's what I like to do because I think it's really fun. There's something, to me, finding a candle that pays you 20% in like 4 minutes, that's like a highlight of a day for me. I know that 20% is not huge gains. Like you're talking the same day spy, it's going to be $10 a contract. Scalping is not what I do to actually try to be profitable at trading. It's what I like to do because it's very fun. Or it's fun for me at least. And then there's the times where the scalp turns into a day trade that actually does end up being pretty dang profitable. Day trades, you're looking for a little bit more. Generally speaking, your stops are going to be, wider than a scalp. You're going to be risking a little bit more to ideally be making a little bit more. You plan on holding those trades for a while. Don't get me wrong. If a day trade works in 10 minutes and your whole goal is accomplished, sell it. There's no reason to, as long as your trade plan played out, then you've accomplished your goal. That's all you can do. And then, of course, swings are going to be always analyzed on a much bigger picture. I know when you guys see me in voice chat, I'm oftentimes streaming 5 minute charts, 15-minute charts, whatever it is. Nearly all of my technical analysis outside of intraday trends is done on the daily time frame. So that's my way to be able to identify where we are on the daily and use it on those shorter time frames. If I find those levels on the daily, I care about them a lot more than, an hourly support or a 4 hour support. Daily levels are where things start and stop. And so that's why I focus on those a little bit more. So obviously, if you're a swing trader, you have no business on the 5 minute, the 15 minute, any of that. If you've developed a good plan for your swing trade and you get, a 5 minute candle close under a level, you have no business stopping out of that trade. You always need to be looking much bigger picture. A scalp, there's times where I will enter a scalp on a candle and at the opening of a candle, and by the close of that candle, I am stopping out. I want to be right or wrong instantly. A swing, you have to have a little bit more, you know, leeway, little bit more patience with them. Of course, all of us sometimes have a swing trade get away from us. I got one riding right now that's got way away from me. Not much I can do about it. So I've just traded against it. That whole position is financed and covered, and so whatever. I don't care about it. But so that's what we're going to cover tonight. Just want to give you the breakdown in the beginning. So obviously we're going to start with scalps. Shortest, quickest. You are not looking for much. I think that's where a lot of people start. They struggle with scalping. If you're ever find yourself being a greedy trader, if you ever find yourself, holding for longer, if you're one of those people that says, "Oh, I'm just going to see what happens," we got a couple of them in here, and that's fine on a runner. You'll even hear me say it on a runner. I'm going to see what happens. But if your whole trade plan is buy this contract and see what happens, it's not going to work for you, especially if you're a scalper. Like I said, you when you are actually scalping, you are looking for volatile movement that happens quickly. I generally will not be in a scalp for more than 2 or 3 5 minute candles if I can avoid it. There's times where I get trapped and you just chop and chop and chop, but I'm looking for that very quick, and most scalpers are looking for that very quick, nice little payday. You're padding your pockets with it. You aren't trying to make big gains. Maybe you're down a little bit on some day trades and swing trades. So you're going to scalp and you're just going to take that few bucks back from the market and finance those trades a little bit. It's my personal favorite thing to do in the market. I just, like I said earlier, it's something that I find a lot of enjoyment in. There's something about, that 15, 20% single candle that I enjoy. I know that it's not big gains, but it's something that I really like to do. It's something that I think a lot of people do really underestimate what you can accomplish with it. I think that scalping, no ifs, ands, or buts, if you have a smaller portfolio, is what you should be doing. You dramatically reduce your risk, you stack up a bunch of little gains, you hit those base hits, and it will grow your port really, really fast. People don't realize that, and I'm throwing out random numbers, but you got a $500 port, you buy a $50 spy contract, you scalp $6 or $7 out of it, you're whatever it is, 10%. You've just 1% of your port in one trade. If you 1% your port every day for the whole year, you're up 1,000%. You know, your $500 is going to be 5,500, $6,000 by the end of the year by little small safe scalps. I know that a lot of people, they want those, you know, the big home runs. They want to swing. They don't, you know, they don't mind seeing a swing trade down for days on end, if as long as it profits in the end. For me, and I do swing trade every single day, you know, basically I'm swinging something. For me, I like those scalps to pad those pockets. You know, that's all you got to do. Maybe you got something that's just consolidating on you, you know, and you're trying to, yeah, greed kills poets, savage. You're trying to, you know, you're getting chopped around on a swing trade. Well, then sit there and, you know, scalp SPY or scalp QQQ or scalp whatever you like to scalp. You know, it doesn't just have to be ETFs, and look for a little bit of padding of the pocket. You know, if you have those swing trades, if you have those day trades that are maybe going against you, then all you have, you know, don't just sit there and watch them die. Um, so that's why I scalp, and beyond loving it, you know, that's why I scalp. So how do we manage these scalps? What are some things that we look for? What are the realistic targets and goals and things like that that we have? So for me, I this is it's going to be funny to everybody because you know I always try to teach, you know, trade what the market is giving you. Um, so today, I mostly scalped long. I'm not gonna lie to you. I took 5 scalps today. Every single one of them was long. I made exactly $0 on the short side of the market today on I don't know what, 12 buck flush on SPY. Um, Wrong decision making. It was even why I made the choice at the end of the day that I wasn't gonna hop in voice chat, just because and thankfully it worked for me. We're gonna say that. But I was trading against the market. I was not trading what the market told me to be trading. I had this bias that I wanted a decent bounce to short. Looking back, we got a couple of them. I called it like trading by here and then hit a couple back here. Uh, but I basically called it because I didn't want to keep trading against the market. I knew that I was trading my bias. I knew I wanted this bounce. Well, the fact that I scalp very likely saved me. So, what do I do when I scalp? What do I look for? What are my targets? What are entries and things like that that I want? So a scalp very oftentimes is going to be counter trend. You know, you've sold down into strong support, or you sold down into or bought up into strong resistance, and you know, trend might be up, but you're looking to you know, sneak a few bucks out of the market because you're at a point where you can't get long because you're longing the highs. You could wait and see if you get a pullback and buy that pullback, or you can take the low risk, high reward scalp to the upside with a very tight stop. You know, or downside, whatever it might be, looking for a continued move, or you know, maybe you just catch the little pullback and you get your 10% and you pull back to where you feel comfortable buying and you buy it to catch the bounce. So today, one of the first scalps that I took, and I even talked about it. This is obviously not a great one. I bought these pullbacks looking for a bounce up to this VWAP and to this hourly 20. Obviously, you know, as we look at the day, we start to see, you know, it looks pretty ugly, but I was viewing this as nice sell off. My bias is looking for a bounce to short. We start to get a little bit of a bounce. When I'm looking for a bounce to short, I'm looking more than 60 cents. So I knew we pushed above VWAP. We bought this dip. We scalp calls. I think we made 15%. And then on this very next candle, we get stopped out for break even. That's all we were doing. We were looking for a nice little move up. We knew the second we bought, our stops are tight. We start setting any sort of new lows, and this trend is going to continue down, you know? So our stops were tight. So I don't remember, we bought either this pullback candle, maybe this pullback candle. And I told people, you know, stops are going to be under this 572.50, and we're buying 572.66. We're looking for 40, 50 cent bounce up. It's not much. Like I said, you know, I closed my spreadsheet already. I think we made 14%, 13%. And in all honesty, I sold half of mine, the other half stopped me out of break even. That was, you know, that was the trade. That's all you're looking for in a scalp. You are looking for quick volatility in a direction for small percentage. The you need to be ready to stop out extremely quickly, and you need to be ready to take profit extremely quickly, because that's what a scalp is. There is times, of course. So one of the next trades we took, you guys know that I personally love to trade the opening range. We sold down heavy into the opening range. We grabbed a call right here. This was and we might have hit on SPY, QQQ, whatever it was. Opening range was set. We grabbed a call right before it was going to get set, looking for another scalp. I think we made 21, 22%. Our target on this scalp was the high of this candle. That's it. Not a big giant move. We got 50, 60 cents up or whatever it was on QQQ. And where was our stop? Any sort of strong selling under this 569.27 below the opening range. So that's all a scalp is. We're typically looking for a counter trend trade in the opposite direction to previous support or resistance. That's it. That's all we're looking for. We don't want anything crazy. Is there times where you can say, okay, we set some nice candles, we're setting a little bit of a base. I feel like I can buy this pullback. I can have stops under here. I'm targeting the opening range. And maybe you get this move. And then you get the close above the opening range. Well, this is where a scalp can suddenly turn into a little bit more of a day trade because you were provided a very nice entry with a very tight stop and a very close, reasonable target. On days like today, obviously we can kind of throw out some of those further targets because we had moved so large in one direction, well, basically two directions. We took a very nice dump, and then we took an absolute ripper and proceeded to rip, through the night into the open. So you can start to have wider targets because that trading range is bigger. And so we just want this quick, and we want to be right or we want to be wrong as quickly as possible. That is what makes it a scalp. It also gives us that nice opportunity, as I said, to look for the break, a break back in, or maybe you get your really nice candles and then the market gives you no reason to stop out. So like I said, for me personally, I like my scalps 2 3 candles. Is really all I'm looking for. If I can get one nice one like this in my direction, very good chance I'm selling. I'm viewing this as resistance. We happen to break back over it. If you stuck with it, here's your, 1 2 3, and then all of a sudden you start consolidating. Consolidation is a scalper in a same day's worst enemy. You don't want to hold for 30 minutes and have nothing happen on your scalp. So realistically, you get this nice push up. The second you see lack of strength, you see a weak candle, you take your last couple off right there on your quick little scalp. That's all that we are looking for. I see we got a couple things. JT, I'm assuming because that was about 6 minutes ago. That was probably what I'm talking about. You don't need a lot to grow a $500 port quickly. And this is a very safe way to go about doing it. One contract, that's all you need. Oh, I wanted to say, so when I'm trading and I'm scalping, SPY QQQ specifically, 99% of the time, I'm going one strike out anytime in the first 2/3 of the day. Say we're trading down here around this 568. I'm likely going to scalp a 570. I'm not going to go outside of a 570. I'm not going 571. I'm not going 572s. I'm not, I don't want to be that far out. And then if I'm trading a contract, and this is just kind of a rule of thumb for me, in not only scalping, day trading, all of it, I will not purchase a strike price that has not been traded yet. If 570 has already been traded previously in the day, we know that there's going to be plenty of liquidity there. There is going to be people buying and selling, especially at major breakdowns or breakout points. We know there's going to be a lot of liquidity there. 573s, well, people likely aren't looking at them. 570s are fine if you're trying to catch this little scalp. 569s, just fine. So I'm always going to be very close. The reason that I do that is
Hey,
options.
River, do you mean
The
like
most
if
powerful
the
thing we can do as options traders is get the shift from out of the money to in the money. What happens there is at no additional cost to us, our leverage is actually dramatically increased. And what do I mean by that? If you're a buck out of the money, you might have 40 delta. You wind up 50 cents, you know, you move that buck and get 50 cents in the money, you're probably going to have 50 delta, which means your leverage has increased by 25% at no additional cost to you. So a lot of people, you'll see them trade those way out of the money things, and you know, maybe yeah, they hit 500% or whatever it is. Well, if you start looking at the money contracts, at the money and in the money contracts will always pay you a higher dollar amount. They of course cost more, you know, 10% on $100 contract versus a $50 contract is double, you know. So they of course cost more, but we trade those because we want the shift in the money. That is where really big money starts to be made. So trade those nice safe contracts right at the money and you're going to be happy. iPad, yeah, you know, waiting to see what happens oftentimes is um, you know, oftentimes is not the move, you know, especially on scalping. Cut those losses quick, quick. Just admit you're wrong. And so let's see. Oh, we got Norvin in here. Norvin, how you doing?
What up,
What you
River?
average down? Nope, nope. If you're scalping, you do not average down. There's one of my favorite traders, Paul Tudor Jones. Dude's a genius. If you don't know about him, he's one of the most legendary traders in the world. On his wall, hanging there, losers average losers. Don't add to a losing trade. Think about it. You say you buy calls here. You're trying to catch this bounce. We're just going to do an example. Say you buy calls here. You're trying to catch a nice little double bottom setup. I wouldn't be opposed to it, in all honesty. Cut your losses quick. Now, as we start to sell down and the market gives you a reason to buy, you take a new entry. You don't want to be the person who averages down and then starts breaking even right as the market's going to start faltering. You want to take the tight stop, lose your $5, buy here as we push back up. You cover the loss and you make more money. You know, reducing risk and maximizing reward is always what we want to do as traders. And when you start averaging down, you are increasing risk right off the bat. And so you don't want to do that. Yeah, Nick, nice job. Yep. I don't think you're supposed to average down on a scalp. You are not. And exactly, you must listen to me on occasion. It means you are early. And if you're early, you're wrong. No big deal. We all do that. You know, I'll put it on my spreadsheets. You know, I'll say, hey, we were 5 minutes early and it worked. It happened to us on QQQ here a couple days ago. And I know because so we bought this. We bought right around here. Yes, there's a trend line. We had enough support right here. You know, I said any breaks under here, we're stopping out. Well, I took the stop out when this breakdown candle came. Then I realized it was a nonsense news candle. So I got stopped out. And as you can see, I mean, those contracts obviously turned around and paid really big. I wasn't in there because I took the loss because I followed my rules. It's all you can do. I was unfortunately 5 minutes early. Had I waited 5 minutes longer, this trend obviously didn't exist at the time, but had I waited 5 minutes longer, it was a printer, but I was early. So I was wrong. That doesn't mean I'm going to add to it. Oh, well, yeah, Norvin, I mean, I don't know what to tell you. Yeah, you were what? You were up 125%. I don't even feel bad for you. That's just,
No,
you know, but that's likely because you weren't looking at the chart. You know, you were trading your emotions, you were trading your feelings, you were trading your profit and loss. You're probably posting on Trade Floor saying my SPX is up $100 or you know, my SPX is up 100%. I'm setting a sell order at 500%. And then you probably said like, yo, chat or something like that. And so you should have been selling, you know, take your money. And especially if you're doing something dumb like trading SPX, take your money. Okay, so with that, scalps, everybody get it. Short, sweet, 2, 3 candles. Look for places of volatility where you expect volatility. That's it. Admit you're wrong quickly and take your money quickly. Always reasonable targets. Almost always, if you're scalping, whatever the previous intraday support and resistance is your target. Even, you know, you have to ask yourself, I'm risking 20 cents to make 40 cents. You have to do that little risk reward math in your head real quick before. And it's fun. It's quick. It's generally speaking, it's easy. And it's a nice little way to pad the pocket or grow a small port in a safe manner. So everybody get that?
yes, sir. Yo, River.
Oh,
So
God.
when you're scalping, you never marry a position, right?
Mm-mm. Oh God, no, no, oh no. You want to abort mission the second it starts going against you.
It's like hot
Because
potato, right? Like hot
yeah,
potato.
Yep, it's a hot potato and it's gonna burn you bad if you hold on too long. As you saw, I mean, you're up huge, 45 to 100 bucks and you don't sell until you're at 20. Like, bro, what are you doing? Come on, that is you thought something was gonna happen that didn't happen. Like I said, we took 3 scalps today. I believe we took a scalp somewhere around here. I believe we took this, scalp somewhere around here. And then I believe we took this. I was trying to play this double bottom, obviously opening range, and I think we got stopped out right here. So that was 3 of my trades. And then I know the next one I took was off of the QQQ closing price. Oh yeah, this one, QQQ closing price, maybe. Oh no, I think we were trading SPY at this point. Oh yeah, SPY closing price. Caught this little bounce, obviously. And then QQQ, we ended up taking this bounce somewhere down here, sold this one for pennies. And that was, basically just playing this breakdown over here, closed right above it. I bought that with a really tight stop. I mean, I probably would have widened it a little bit, but bought that one with a tight stop. And caught this candle, and then it kept going. No big deal. Okay, so next up, we're going to talk day trades. Definitely treat it a little bit different. We're going to continue to talk SPY and QQQ, but all these rules apply to anything that you're trading. So this one is going to be hindsight trading for me. I'm super wrong with you guys. I was not in this trade. Looking back, you always get to see the things that you probably should have been seeing that you weren't paying attention to at the time. So if I'm paying attention and all of this stuff, and I'm actually thinking about the market as opposed to looking for a ripper to short instead of just shorting the bounces I've been given, this is a trade that I would very likely take. So we bounced off our trend. We had a little, it's 3 push wedge-ish, but it's more just, a couple tests of a trend line here. And then we've taken a nice bounce off of it. We already have this trend set from up here. So we know we want to yeah, this was a ripper. This was a ripper. This was a sick one. Congratulations. Good one. Good job for being in there. $3 rip on it real quick. So up here, we know we have our trend, we know we have VWAP, we have our 50 EMAs all above us. All of this makes sense to be looking for the short on the way up. As I said, I didn't take this trade. This is all hindsight. We're just discussing how do we treat a day trade? Well, a day trade, you aren't going to make the quick decision on the volatile candle that you're going to try to catch a bounce. You're going to let the market work and you're going to let the market start giving you some reasons to think about taking that trade. A day trade requires a bit more planning and it requires more serious targets. And it requires looking at both ends of the spectrum. Why do I want to be bullish? Why do I want to be bearish? If you don't look at both sides of it heading into day trades, this applies to swing trades and scalps, all of it. You need to look at both sides. So on a trade like this, for me, I would be watching a nice buy up. I would be watching us buying right into the previous wick where we did bounce earlier. We have to view that as support turned resistance. Also buying up into the trend. So we got trend, we got VWAP, we got 50 EMA, and we got previous bounce point on the day. We're watching all this play out. Maybe we caught the bounce, maybe we didn't. Now we start seeing the market lose volume. And yes, the candles are pushing up, not with strength. So now we get to say, okay, I'm looking for a day trade. Chances are, don't trade same days. With a day trade, you're looking for some continued selling, another leg of a trend, those kinds of things. Like I said, maybe it's 5 minutes, maybe it's 10 minutes, maybe it's 3 hours. It's you're looking bigger picture more than 1 or 2 candles. You want some movement because you're likely widening your stop a little bit. So you need to widen your profits or your profit targets. So we watch the market buying up, buying up, buying up. We know where our resistance is, trends, VWAPs, 50 EMAs, previous resistance from the day. Even if we look left, there's some other stuff going on yesterday too. So this is our entry. No questions asked. Where's our stop? It's over this 50 EMA. So we know we got $1 or so of risk on this trade. So now we need to make sure that any potential downside is worth it. Is the reward there? So we know our first, if we were only looking for a scalp, our first target's going to be right here. It's going to be this previous support from the day that we've kind of broken, or, broke down, now broken up. It has now turned resistance. That's going to be our first target. And I know that is only, we're only getting, well, I guess about a buck down from those highs, and we got just over a buck up. So that's only a 1-1 risk reward trade. On a day trade for me, I treat everything the same. I scalp all, or I trim always. If I see us coming into a resistance or a support, I'm always going to trim. We can see the market kind of bounced. Main target though is going to be this opening range low. So we know that in our head, at least, worst case scenario, we're risking a buck 15. Best case scenario, we're getting about $2 down. So we got a nice little risk reward on the day trade here. We aren't going to trade a same day because we aren't going to be fully convinced that it's going to just dump down to there. We might see some consolidations, and we don't want to be stuck in a same day, waiting for the move to come. So we trade a next day contract or 2-day out contract. And then we still select our reasonable strikes. We still want to be in a strike that has been traded at some point throughout the day, and a strike that falls within our targets, or at the very least is super close. So we're short in 571. We're basically looking for 569, give or take. We know that we only have 3 contracts we can choose from: 571s, 570s, 569s. Much of it's going to be up to what you want to do for your portfolio, or what do you feel comfortable with risk wise. For me, I'm going to 570 on a trade like this, no questions asked, because I know that if I do get that nice little push down, my delta is going to be good and high. Well, the advantage to a day trade and the advantage to having time on that contract, these little wicks aren't killing you. So we can use the charts to tell us what to do on these day trades. We're selling, we're selling, we're selling. We should just be using the highs of these sell candles as our stop losses. Oh, we took a bounce up and wick it. Well, I'm going to move my stop to there because we assume if we get above those, we're reversing, or at least, for another bounce. So we want to take our profit. We get another sell candle, goes to the top of it. You get another sell candle, goes to the top of it. Let's be real here. I would be all out at my target, but because it is a day trade and because you have a little bit more time, you get to just move those stops. Obviously right here, I'm personally going to be all out no matter what at the double bottom. And then if the breakdown comes, you want to reshort it off of the other side of that double bottom, no big deal. But for a day trade, we keep it all reasonable. We keep our targets reasonable. We keep our contract selection reasonable, and we formulate our plan before we enter the trade, and then we execute it once we're in there. And so again, this isn't a trade that I took or anything like that, but it was just a really good example for what you should be looking for in a day trade. As I said, maybe you get your move in 20 minutes. Maybe you end up getting to hold it for the whole day because it's so far in your favor. Don't get me wrong, all of a sudden you're trading in some 570s down here at 567. You can really kind of widen that stop and just base it on how much profit do I want to give back and run with it. And so just to like break down, again, the basic parts of a day trade, going to have a slightly wider stop than a scalp. Obviously, you're going to want to see, some confirmation that you're wrong. Contract selection going to be about the same. You always want to keep it within the range of your targets, and you always want to be trading to the best of your ability. Obviously, there's times where you can't. There's always going to be days where uh, you know, you have to trade a contract that hasn't been traded due to the price action of the day. Market's knifing and there's reasons to get in there. You probably have to go in something that hasn't been traded. So of course there's, times and places. And then use the charts to manage your stops. Don't trade your PL, don't trade any of that. If the market is selling and it's continuing to sell, then you can stick in there short and stick with the trade until it really tells you, hey, you are wrong. Like this one, obviously hindsight trading, so that makes it easier. We never have a candle close above the low of our previous low bounce point. So there's reasons enough to be short, or at the very least, look for a little scalp short off of there if you aren't in there yet. So That's what I look for on day trades. Obviously, we aren't doing any of the charting. We aren't doing the technical side of things. I wasn't trying to get too deep into trade plans. This one just provided one that, if your eyes were open, this was a really, really nice short entry today. My eyes obviously were not open today. I didn't catch it, but definitely a no-brainer again. That's the ideal situation on a day trade. And then, so I did want to touch on a little something. You heard me mention earlier a scalp. Maybe you were scalping short, down to this level. Maybe you took this as a scalp as opposed to a day trade. You're scalping short down to this level. Well, it's really worked in your favor and it hasn't really given you a reason to stop out. So your scalp can accidentally turn into a day trade when it's really going in your favor. And you got a really, really great entry because you maybe took a slightly higher risk entry looking for that quick volatility in the opposite direction that ultimately turned into a reversal for you. That is just fine. Um, a day trade should very rarely turn into a swing trade. We see it all the time. Somebody's down 50% on a contract, so they're like, oh, I'm swinging. Um, that's wrong. In my opinion, that's 100% wrong. Swing in a contract because it's red, again, like I mentioned earlier, to see what happens, or, oh, I'm deep red, I'm going to swing it and see if I can get a bounce tomorrow. Well, most of the time it's not going to work. You just need to admit that you were wrong and move on. If you planned on your day trade being a day trade, then keep it a day trade. If your scalp is a scalp and it works in your favor and turns into a day trade, great. However, if your scalp, you know, goes against you, obviously, your scalp goes against you, don't let your scalp turn into a day trade because you're red. Um, Stop out, admit you're wrong, and look for a new entry in the market. One of the great things about scalping and day trading, in my opinion, is there's a lot more safety involved than swing trading. We've all been in trades where, everything was good, the trade was intact, we swing overnight, something happens overnight, and we wake up and the entire trade plan is so blown out. We are so far past our stop loss. Trade went wildly against us overnight, and there was nothing we could do about it. That is where the inherent risk comes with swing trading. Another very common mindset in swing trading is I don't care that I'm red, I have time. Well, okay. But if you're wrong, you're wrong. And I don't care if it's scalp, day trade, swing trade. You need to have a very defined stop loss. And I don't care if you have 6 months on your contract. If your stop loss is hit and you bought the contracts 2 days ago, you stop out. You don't deviate from the plan because all you're doing is exemplifying your losses in a big way. And so, you don't ever want to do that. And so, again, just to, cover everything, scalps becoming day trades, just fine. Day trades becoming swings, more often than not, I don't support it, especially because day trades are often short expiration contracts. Swing trades becoming a day trade, great. That's fine. If you enter a trade for a swing and it works in your favor for a day in the first day, congratulations. You don't have to put on the risk of taking the trade home with you. Take your money, or take some of your money and swing a partial position. That is always going to be some of the best ideas. You see the truly great swing traders, people like Shark Tilio, those kinds of guys, they're all trimming. That's what you do. You finance, you finance, you finance. And then if you want to leave a couple working, great. But just sticking with whole positions of swing trades and options is gonna come back and bite you eventually. It's gonna work great a few times. I'm not gonna deny that at all, but it will come back and bite you eventually. If you have a very nice day trade and it sets you up for a swing trade, I would recommend exiting the day trade and repositioning into something new, only using your profits. So then you only risk your profits and you have that chance to either give back some money or add some more money to the pot. Those are the only two ways it goes. And to me, that is That's how you properly swing trade. But we're gonna get into, I see you got a couple questions. Yeah, Valerie, you're right. Perfect lower lows all day long. Even a nice broad bear channel, which will almost always give you three legs. So you got your one, you got your two, you got your three legs down. Beautiful. I mean, it was perfect. Ooh, iPad. Yeah, see, I have been definitely for the last few days feeling bearish. Not bearish. This push up was not convincing. We start to see this. I'm not convinced. We see doji candles, inside candles. We've been steady grinding. We haven't seen much of this. And then you give us a nice bear candle here. I'm definitely not chasing the longs right now. When you scalp, how many cons do you usually buy? So how many I buy versus how many you buy is completely different. You base it on your portfolio. Whatever a half a position size is for you. I don't know what you trade with. It's none of my business. It's nobody's business how much money people trade with. But half position size. If you normally trade with $500, trade with $250. Then you catch your little 10% scalp, trim most of them, maybe about $50 contracts. You had a $250 position. You can trim out four of those and you got a straight up freebie that you can see what happens with. So always, always, always a smaller position when you're scalping. Scalp shouldn't, like I said, they shouldn't be your main thing. They should be helping pad some losses on day trades and swing trades and the things that, are more expensive, a bit higher risk, but definitely higher reward. And yeah, the other thing I think that a lot of people miss out. So like first trade of the day, and I'm just making this up, So first trade of the day, maybe you catch these little spike call bounces with us. We're looking for that bounce up. You catch your nice little bounce up. Well, trade your, half position size. We sell down, maybe we catch another nice little bounce. Maybe we catch this bounce. We did catch this little bounce, maybe we catch this nice little bounce right here. Well, now your next scalp, size down. You've banked some profit, roll the profit into the next scalp, roll the profits into the next scalp. I think progressively throughout the day, position size should be getting smaller and smaller and smaller. And you should really start to think about your profits, protecting your profits, and only risking your profits. So Nick, good question. In a day trade, am I looking at longer time frame candles or still watching the 5 minute? Me personally, I'm watching the 5 minute. I won't panic on one 5 minute candle, because I don't care what, everything between entry and stop out and take profit is noise. So again, I might say my stop is right up here, but I'm not going to stop, and we'll just use this one. I might say my stop is right up here above the 50. I'm not going to stop because a candle pushes above it. If I really start getting blown out, I might take the stop out. But just because I see a little poke above it, I'm not like, oh, I'm stopped out. I need confirmation. I need candle closes. I do like to, say it's whatever, 12:13. And I might be watching the 5 minute candle. I might put a little more emphasis on that 5 minute candle close because it would be a 15-minute candle close as well. So you can think about it that way. But for me, I most of the time going to be watching the 5 minute. And then because I only trade daily levels, I don't trade, short time frame levels. I trust them. So when they break, they tend to break, for me. They tend to break. So I trust my levels and I trade them accordingly. Ramsey, yep, 3 push wedge right here. Obviously a tricky one. You can see I didn't draw it out. I should have drawn it all the way out to here. It was part of the buy right here. And so again, as we start looking left here, we have these lows, yesterday lows. We have candles closing back above a 3 push wedge. I will take a risk on this trade personally. Yeah, iPad, and I get it. I'll say that's what I meant. I thank you for bringing me back to that. I'll say I'm not bearish. I'm just less bullish. In fact, after today, if I'm being entirely honest, I'm more bullish than I was yesterday or the day before, or the day before, or the day before. We finally got a nice little clobbering. Market reacted, negatively to PAL. Obviously, we got well. Amazon had really good earnings other than the two places where it really mattered, So we had some good earnings. We're finally getting a nice pullback. We can probably start to looking to buy in some dips. If we can get down here, this 557, 558 zone, that's where I'm gonna start to have some interest in buying. Yeah, and iPad, that's a great answer. One contract is really, really good. One contract is what most people should be trading until they get the hang of options. And take your money. You don't need to squeeze every penny out of it. You got to think big money people, rich people, 401k people, they are so hype on 10% in their money in a year. We do it in a candle. Like accept what you're getting. I think that's where a lot of people struggle, is that they want more and they want more and they want more and they don't ever think about percentage gain on a portfolio. And so, you get a $500 port and if you make $500 in a day and double it, congratulations. Also stop YOLOing, but congratulations. But if you got a $500 port, it doesn't take long to double it with small gains. I mean, a 10% gain on a $500 port is $50. Definitely pretty achievable with just a few safe, cheap scalps throughout the day. And so just trade small, trade smart, trade safe until you get the hang of it, and you will probably find yourself doing much better. You need to get your fundamentals. Yeah, yeah, yeah. And letting emotions control you is not the move right now. I'll be the first person to tell you. We have really questionable economic policy. We have inflation ticking up. We have a weakening labor market. We have a million reasons for this market to sell. Um, we don't have a ton of reasons for the market to be in buy mode, but it's in buy mode. So we've been buying heavy for the last 3 months, buying anything they're offering. So a lot of fundamental reasons to be short, but the market is, at least in my opinion and in my experience, the market has quit listening to what the administration has to say. They're listening to what the companies have to say, and they're listening to what the Fed has to say. They know that, I'm not trying to talk good or bad about anybody, but they know that the administration is not very honest, and a lot of what they say gets taken back shortly after that. And so there's not a lot of reason to react to what the administration is saying until something is actually official. So there's all these, and we have debt issues. We got massive highest credit card debt issues. We got a bunch of, mortgage, whatever they called, uh, people failing to pay their mortgage, people failing to pay their car payments, failure to pays. We have a ton of those going around right now. And then you see some other data where some of the consumers feel amazing. Some of the consumers feel like the end is going on right now and they can't afford anything. We do see, at least from the data, that the consumers are saying that they feel squeezed and they feel like they aren't making enough money. But then you look at the consumer spending habit data and they are spending like money grows on trees. So it's hard to pin down exactly what's going on. So fundamentals are tricky right now, in the market as well. So when starting trades, sell overnight can go up to 641. SPY, assuming. SPY, sell overnight can go 641. Yep, 641.57. Well, so looking left right now is pretty tricky because there's not a lot to the left over here. So I'm really just trading fibs up here. I was in the same stance as you. I thought we were gonna get a knife. I thought we were gonna get more bounce than this, and my like hopes and dreams were shorting this double top at 641.57 that just never showed up. And I think that this was that continued reaction from FOMC yesterday. I didn't get to see the market on close data today. But it would appear that people were selling into the close, obviously. So people didn't feel comfortable taking trades home tonight. It's just a nice little reset in the market. Oh yeah, exactly. You said it right there. Consumer confidence is an all-time high. Yeah, Nick, I know, and not only is it wildly expensive, and people are still buying them. Which fibs do I use the most? I don't like fibs. I can't say that. These are all off the day. These are all off the daily. I actually showed how I did this in class last night. So obviously we traded the big retrace on the way back up. So this is a fib retrace. Then these fibs, these lines right here, these are actually extensions off of that same move. But when I draw extensions, I like to pull back to so this is the retrace. I use the, because when you use an extension, you get a midpoint. So I like to use the 50% retrace as the midpoint for my first extension. And then right in here, these levels that I've been trading recently are the extension of this range that we were in for 10 days or whatever it was. Only reason I'm doing that is because we're at all-time highs. So that's how I got my levels. I also pay attention to daily highs and lows when we're up here. That's really the only reason I do it. I think intraday fibs, I mean, they're fine, but I don't really know anybody that uses them successfully. I know that, well, I won't talk about him, but the old VC guy, he talked about him all the time. And let's be real here, he didn't use them. We all saw him stream and screen. There was never fibs on that thing. So I mean, they're fine. But I put zero weight on a fib that wasn't drawn on the daily, personally. Chill, guys. I mean, I was trying to not I don't know what to say, dude. I don't know, dude. Over 800. I don't remember what that would be a response to. Oh yeah, probably. Oh, the car payment. Yeah, yeah. Oh yeah, I'm sure. Yeah, and that's before insurance. Which I'll tell you what, insurance. The whole, we probably should not have let them in 2019 remove the limits of how much insurance can increase on us every year. That was probably not the best idea. Avenger, remind me tomorrow, and I'll show them to you again. How I did it. I'll show you actually how I drew them. Unless there's no other questions. Yeah, I'm real close on mine, JT, but mine's my card payment's cheap. I've had it for 5-6 years now, so my card payment's like nothing, a couple $100 a month.
Joe River, can you check Nibius? It's ready to break out, bro.
Is that your NBIS? Is that the one you're always talking about? Oh well, it looks like it rejected exactly.
Oh,
Yeah, remember you told me to pull this one up and I told you to short this trend at 57? Did you listen? Did you listen? We dumped $5 off of it. And this one I'll run this one to the ground. What's the best way to draw a trend line? So for me, when I draw a trend line, for a trend to be a trend, you need a lower high or a higher low or a higher high or a lower low. You need one of those, So when you draw a trend, I personally, 100% of the time, draw it on wicks because a wick tells us where one side gave up. So we'll use SPY today. SPY bounced up, sold down, SPY bounced up again. This right here is a lower high. So we go from our high to our lower high off the wicks. Doesn't matter if you're on the 5-minute, the 15-minute, the daily, the weekly. I draw them off the wicks. I don't necessarily care how many I mean, when it comes down to actually trading it, I'll care how many touches it has. But as far as drawing it, I don't care. I'm not gonna move a trend so that it has more touches. And then that's the second part of trends. You go from wicks to lower highs, higher highs, whatever it might be. And then they do not adjust. The trend is the trend, you don't want to be, at one point, this was a trend. At one point, this was a trend on the day. You don't want to say, oh, well, we broke out. So, actually, my trend's here. Well, we kept breaking out. So now actually, maybe you short it at that very first trend, or even, I mean, yeah, right there. You short this trend. Maybe you scalp it for a couple of bucks. It breaks out, you stop out. You don't want to start saying, okay, well, actually, yeah, they rejected it there. So that's the new trend. Oh, well, it kept going. I'm moving it here. I'm moving it here. And then you move it here and you're like, okay, so now I've let the market run $1.50 against me and adjusted my trend. And did I end up making money? Yes. But you never want to do the adjusting. You get it drawn on there and you don't move it. Of course, as new trends form, this can be your trend. And then you get the breakout. And then as a new trend forms, feel free to draw that. But don't just adjust, like you might have seen. I think it was QQQ. There's days where you'll have a bunch of trends, Here was like a little wedge bottom that didn't work, the bounce up to it. This turned into a trend. This was a trend. This was a trend. You can even, There's a million trends throughout the day. You just need to respect them as they're forming or breaking or whatever it might be. Well, so you guys are kind of ran into the end. We only got about 2 minutes. Yeah, micro trends for sure. Bigger picture trends always going to matter more. Like this one. Like chasers die. That's the one thing we know about the market is chasers die. So people chasing this break, thinking this breakout's going to come, they get torched. They get torched. They get torched. When these things are set, they get torched. The risk reward here greatly favors shorts. I don't care which one of them it is. You short here, and your stop is a break above this daily trend. You have tiny risk. Best case scenario, you can start targeting some of these, previous lows. You have small risk for good reward. Again, you push up to here, you short. You don't buy. We don't buy setups like this. Do we acknowledge that the market is going up and this thing is likely going to push higher? Sure. But we don't buy up here. We buy down here. We buy down here. We buy these pullbacks or these breaks to supports. This is where we're buyers. This is where we're shorters. 80% of breakouts fail. So now we can look at this and say, okay, 1, 2, 3, 4, 5, 6, 7 tries, maybe 8 times the try, but that still does not mean we buy the highs.
Yo, River, you think AES is ready for part 2?
Bro, don't even try to talk about my stock to me, dude. But they do have earnings tomorrow. Oh, wait. Oh, dude, Crash Miss. I wonder if he's in here, dude. I screwed us. Oh, wait, did they have earnings today? What happened here, dude? It told me it was tomorrow earlier. It missed on earnings, but it also has earnings in the morning. This thing tells me 9 a.m. tomorrow. But in any case, I screwed us. And it's dividend day. Oh, what a day. Yeah, I'm buying the next dip on that thing. I love that company. Okay, well, so you guys class got away from us. We didn't get into swing trading. We're gonna have to cycle back to that one on a different time and a different place. But I appreciate y'all for being here. Yeah, dividend day. There you go, bud. Little pocket patter coming for you. Sweet one. But we will do swing trading. Sometimes sooner than later. You guys remind me. We'll get into it. Same ideas apply to it that we talked. Scalping, day trading, just much bigger picture. Yep, Ramsey. Thank you, everybody. I appreciate y'all for being here, and we'll catch you in the morning.
Hey, River, can I run something by you real quick?
Yeah.
Thanks, River.
Absolutely.
Awesome.
Yeah, Narvin.
So through all this, kind of what we're trying to achieve is like get a good entry and like go in the direction we're thinking about going. So when we're talking about like, I mean, what's the point of like looking further out, like the day trade and the swing compared to the scalp if we're trying to accomplish the same thing, right? Like it's better just to get your answer quick, right?
Yes and no. So when the answer is in your favor, yeah, it's great. When the answer is not in your favor, it sucks. That's the inherent risk of scalps, why you size down on scalps. When you're wrong, you're oftentimes wrong pretty quick. And like I don't know how to say this without like sounding like mean or anything like that. Scalping is tough. At least the emotional side of scalping is tough. Are you actually going to stop out when you're supposed to stop out? Are you going to take profit when you're supposed to take profit? Are you going to be happy with $7 a contract? Most people cannot answer yes to those questions. I do agree. And I think most people agree. Some of the most profitable day traders would never swing trade. There's too much risk. You get destroyed. Scalping and day trading where you aren't taking trades home with you are are the safest ways of managing your money. As I said, the unknowns can happen overnight. So I think if you mostly focus on those, you're going to be very happy. Well, swing trading also has very big benefit, especially if you're an option swing trader. The amount of leverage you are handed for pennies on the dollar makes it sort of a no-brainer. There's a lot of times where if you have the to be purchasing, reasonable contracts and things like that. Swing trading is great. One thing that I teach a lot about option Greeks, and I know people like really they aren't that interested in them. They don't care about them. I wish they cared more. The reason that I teach them is the Greeks are what show you the benefits of um uh show you the benefits of options. So my favorite one, AT&T. You guys all know that I love this stock. AT&T is cheap, 27 bucks a share. But if you trade an option, you get a lot of leverage for cheap. So we got AT&T sitting at 27.40. I'm looking at the January. Oh, I bet you we can even do this. Here we go. Here we go. I forgot we can do this now. So January 26th. Let me add a couple of Greeks here just real quick. We're only gonna add one. We're only gonna add delta for now. So here's our Greeks, here's our delta. So we can see January 26th or 2026, 28 calls on AT&T. They cost $150 and you get 48 delta. Well, if you wanted to go buy 48 shares of AT&T, it costs you 1,300 bucks. You get the exact same exposure for $150. So the benefit that can be provided to swing trading these things it's mind blowing. Like it really, really is. Like the amount of leverage, technically that's what it is that they're handing you for nothing is pretty mind blowing. So the potential reward is what makes swing trading worth it. Do I think swing trading weekly options is smart or viable? No. It's not. Like I 100% guarantee you it is not viable. Can it work amazing sometimes? Yes. But real swing trades, I mean, I got to give a shout out to both Nando and Luigi. Have they held some trades longer than I would personally hold them? Absolutely. Have they made really great gains on some of them? Absolutely. But they're showing all of you what you can do with, some 2 month out, 3 month out contracts. I mean, I think both of them have even alerted some 2027 strikes. You can just have those things riding in the back pocket. You don't care about them. You scalp and you day trade against those positions and you forget they exist. And as long as you're trading, reputable, high probability of movement to the upside, growth in the companies, it can be relatively safe. The swing trading that's bad and is not viable is people swinging weeklies, people swinging, I mean, even, week and a half out when you're on a Wednesday, it's not the best ideas. I also think a lot of people struggle with entry. That's, the number one killer of a good swing trade is a bad entry, for sure. So you're right. Scalping, day trading, scalping, are you ever going to make a huge living at it? Probably not, unless you get really, really good at it and are willing to put on a pretty hefty amount of risk. I do have one friend. I'm not saying this is the right or wrong thing to do. He has a bunch of money. He scalps SPY, with me frequently. He trades 100 contracts. I'm not saying it's right or wrong. He does have the money to be backing up that 100 contracts. But he scalps. He takes his 10 bucks on his 100 contracts or his 15 bucks on his 100 contracts and he's done for the day. So there's, when you get good at it, when you get smart at it, when you understand the risk that you're putting on, it can be good, but use your scalps to fund your day trades, to fund your swing trades, to fund your shares. That's what everything should be in trading. And we didn't touch on shares much, but obviously, you should probably be holding some shares and you should be rolling option profits into shares more than likely. And if you aren't living off of that money. So sorry, that was long-winded, but hopefully I answered it for you.
No, yeah, that
Yo,
was great, man. Because I've been
yo,
doing like GE the last couple days.
Mhm.
It's been getting up to these levels where it just keeps like facing a smackdown. So I've been shorting it at the top,
Yeah.
and
Yeah.
I got like a price target where, I trim or I sell or whatever.
Yeah.
But I am
Yeah.
kind of like long-term bullish on this.
Yep.
So,
Yep. And that's
in the
fine. You're doing one of the most crucial things ever. Um, Dude, you can short a company you're bullish on. You can short a company you're long on. You can buy puts on a company you're long on. That is fine. it is encouraged. I'm not sure if you were in lecture last night, but I'm just going to pull this one up. Pepsi, and then I'm going to use viral again as the example. This one is, of course, the reason I'm using this example is picture perfect. So viral, I'm not sure if he's still in here. Good buddy of mine, been in OOT forever. He was in a long swing on Pepsi. He entered here. I don't exactly know where, but he entered somewhere back here. We all assumed the breakout was going to come. His entry doesn't matter. He's got 3 months of times on it. He's short in this thing. Everything it touches 132. He's long in this thing is shorter term every time it's hitting 129. Well, he doesn't touch his long-term position. He's got 7-8 months on it. By the time this breakout comes, not only did he have a sick entry on short-term calls, he's financed his longer term position. So when the breakout finally comes, boom, he gets to capitalize on the entire explosive move at no expense to him. So yeah, you can totally be bullish on something like this, look at it big picture and start to say, okay, well, I don't want to be long up here. That doesn't mean I want to sell all of my long-term positions, but I'll trade short on it, you know? I mean, it's the same as SPY. Like, think about how people have been saying, quit buying puts, beating the drum. You guys are morons. Don't buy puts. Don't short this market, blah, 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 blah. And then today happens, you know, and those people are torched, you know? And so feel happy to short long. It doesn't matter. Let the chart tell you what to do. There's one thing in trading that will never, ever, ever lie to you, and it's the chart. And if the chart is telling you to do something, do it, you know? Doesn't matter what I say, it doesn't matter what Trade Floor says, it doesn't matter what Norvin says. You do what the chart tells you, you know?
Awesome. I appreciate it, man.
Yep, no problem. No problem. Okay, well, that's gonna do it. Right on, everyone. Thank you so much. I really enjoyed this lecture. Great questions tonight. I appreciate you guys for always showing up for me. Means a lot. And you know, we'll catch y'all tomorrow to forget all of the responsible trading that we just learned and scalp some zero DTEs on the whole market. So everybody have a good night and we'll see you.
Casino Friday.
Yep. Yeah, Fig. Wow. I think the beast. Yeah, everyone have a good one. We'll catch you later.